26 years of CNBC-TV18. Let's talk money.
Hello and welcome to Let's Talk Money. I'm your host, Surabhi Upadhyay. 2025 is in its last leg. The year threw up plenty of surprises for investors, from range-bound equity markets to the glitter and sparkle of gold and silver, from new regulation that seems to be aimed at bringing more transparency to mutual funds, to a brand new investment class in itself called the SIFs. The year has been filled with plenty of headlines. But perhaps what stands out the most is that 2025 was that defining year that saw the stock market baton shift from foreign investors to domestic retail investors like you and me. Now, even as FPI sold almost 1.5 lakh crore rupees worth of Indian stocks, we, the people of India, kept our faith. So will 2026 reward Indian investors for their patience? And what more innovation can we expect from the mutual fund industry? Well, joining me on this very, very interesting conversation, I have with me Mr. Gopkumar, the MD and CEO at Axis AMC. In a bit, we'll also bring in someone who is helping spread this retail revolution, mutual fund revolution at the grassroots level. More on that in just a bit. But sir, thank you so much for joining in. It's always good to do this conversation at the end of the year. And I'm so glad that you're here in person. So big thank you.
Thank you, Surabhi, and thanks for the show of Let's Talk Money. I'm a great follow for you. Thank you. Thank you for having me.
Thank you so much. So let's talk money.
Yeah.
That's what investors kept saying through the year. But money talk was not happening because equity markets were so range-bound.
Surabhi, we talk money almost every day, every minute
That's
as
true.
asset management companies. Yeah.
That's true. That's true. But, and you've been in this business for many, many years, for decades, right? You've seen the financial services world.
Yeah, in
up
capital
close.
markets for around 26 years.
Yeah. So, the point that I just said in the opening remarks,
Yeah.
for me as someone who's a commentator on the stock markets and looking at personal finance very closely, it was extremely heartening to see the sheer power of retail Indian money come to the forefront. What comes to mind when you look back at 2025?
I think a couple of vectors actually helped the way the growth retail is there. One is that acceptance of the product. And that's very clearer that how it is. Second is the regulation is helping up because it brings a lot of transparency. Third important is the digital. There today to buy a mutual fund is so easy. I think if you go 20 years back, it was so difficult to buy a mutual fund. You need to go to a branch and get it done. I think when we speak about retailization, if you look at sheer numbers, you will get surprised. Is that we have what? Gross flow of almost 28,000 crores of flow a month. We have 3.37 crores live in the industry, 3.37 crores live mutual funds, SIPs. Having said that, if you look at number of investors, we are only 5 crores 70 lakhs. If you look at
The absolute number of investors.
absolute number, and if you look at look at and say that what's happening on the broking industry, we have 20 crore demat accounts. Having said that, we can argue that how much stocks are there in the DP, but having said that, people have opened the accounts. Another trend which I'm watching is very clear is that investors are becoming much more aware of these products.
Okay.
The simple thing is that if you look at our passives, passive SIPs have grown by 34%. So the customers who come 5-6 years back are getting much more matured, willing to look at new set of products, not pure active funds. I think that is one trend is changing quickly.
And that's pretty interesting, right? Because the world over, that's the way investing moved.
Yeah.
I mean, passives are now such a huge part of overall global AUM as well, particularly in developed markets like Europe. And I want to talk to you more about that as we go forward. But just to dive a little deeper into the mind of the investor.
Okay.
And we were all very worried, including, industry practitioners, some journalists like myself who've been watching the market volatility. In the past years, when the market was volatile or was falling, people would quickly rush out, of their funds or stop their SIPs. This year also, we saw a big debate on the SIP stoppage ratio. So, again, your observations on this?
So there are two or three things changed, in my view. I think the way the behavior has changed. I think if you look at 10 years back, the people used to spend money and save, in the sense that when they get money, they spend whatever is left over surplus is that what they invest. Today is invest. People start saving, then they
So the SIPs go out first and then you decide what you want to
in that sense, that's how the SIPs are going. And you also look at another trend is that when the markets fall, you generally see the SIPs numbers going up. I always said that mutual fund is subject to market risk, but it is subject to emotional risk.
That's true.
Because the longevity of ship all depends on emotional risk, not on the market risk. Because typically, if you look at over the years, you'll have a couple of cycles. And these cycles were very painful. If you look at year to year, you will say that, yeah, Sensex or Nifty is at the highest level, but I am not still looking the returns in my portfolio. I think that's the biggest buzzword now going around.
Absolutely, absolutely.
So these are cycles. These are very hard cycles. But I think if you look at these cycles, when you go out and you are able to buy at a lower level the units, generally you will see that returns are much more granular and linear.
You know, I was speaking with Mr. Nilesh Shah of Kotak MF just a couple of weeks back, and he's constantly been saying of late that investors also need to tone down their expectations, their expectation of maybe like 14-15% return. Maybe that's something we need to relook at. Now, this is a tough 2025 from a return perspective. Now we are entering 26. If 26 continues to be tough, then will this thesis of retail resilience, will it be tested?
See, if you look at a couple of numbers, I think very clearly, I saw a recent report released by a large fintech company. The 80% of the SIPs comes from B30 cities.
80% of SIPs?
Yeah, and they are large platform companies. So it gives you that sense that people have a faith on these products. Second is that every cycle has taught us that what expectation levels you need to build on, right?
Yeah.
I think if you would have been a 2007 cycle, I think I used to run a PMS. I think everybody used to tell me that, no, 50% is given. What are you trying to say? I think from there we have actually come and say that, okay, there is a moderation in terms of returns, what people are looking at. I think that has changed a lot. In my belief, these are secular. Savers have become investors. Investors started looking much more, looking from a risk perspective. If you look at a number today, FY20, if you look at deposits and cash, that's a real savings in India, right? It was 67% of the customers' disposable surplus. Cut to FY25, it is at 47%. So people start saving in FDs and cash.
But that's a very encouraging trend that now savers are becoming investors. And it seems to be investments first and then the rest of your discretionary spend. So that's very encouraging. Let's also talk about what Indian investors are increasingly investing in, because that's where a lot of interesting trends come up, right? This year, and we'll put the data up in just a bit, the hybrid category saw very steady inflows almost through the year. And funds like multi-access, the multi-asset category, they got a fair amount of money. Balanced advantage funds got money. Arbitrage funds, anyway, on and off, they keep getting money. What did you make of this trend of hybrids getting more money? And then if we go on, I mean, because gold and silver were doing what they were doing, I mean, the last couple of months of flows in gold and silver products, they've also been quite breathtaking. Your thoughts?
I think these are asset allocation funds, typically BAF as well as multi-asset allocation funds. So idea is to, how do you play between different asset classes? Given the volatility in one equity asset class, I think people were trying to say that, can I do an asset allocation properly through these funds? I think some risk averseness has come in. So people are playing through BAF. Especially the retail investors today have substantial portion allocation in the BAF as a portfolio. Second, on the multi-asset. If you look at the industry flows, you can really see that multi-asset has really gained traction in the industry. I think it's all about how do you look at risk between different asset classes. Another thing is that one asset class which was not spoken about is about gold and silver. If you look at last 2 years, today it's become a very prominent allocation in the customer's portfolio. Either you buy a gold fund or a silver fund, or you play through a multi-asset. Second is that people also require to look at and say that, can I take a global exposure? For example, we have a China dedicated fund, is still open. We still see a continuous flow of money on the China fund.
Because you don't have too many options. A lot of funds are shut, they're not taking in flows. And I guess investors are looking for ways to diversify beyond India.
So one more thing is that Indians have become much more aspirational in that sense. I think people are aware about how global equities work. And there is a fair amount of social media buzz around it. People are able to learn about it. And we continuously get asked about, how are you investing in the global funds? For example, we have a growth avenues fund. We still invest in our US equities there. So these are the combinations that people look at and say that, how can I diversify my risk by a proper asset allocation? It is gained. But having said that, my only thing is that fixed income as a category, if you look at, has not gained so much of traction.
Ever since the tax advantage was taken away, I mean, it's kind of fallen off the radar.
But if you look at a comparable product like fixed deposits, you have a superior product in fixed income. I think from a retail perspective, we have not gained much traction. Arbitrage fund got a lot of traction because a lot of people do STPs.
Yeah,
because they
exactly.
don't want to time the
So you put your money in an arbitrage fund or maybe a liquid fund and then gradually invest it.
12 or 6 months. That's what the advisors actually really suggest customers not to do a timing of the market. I think we saw arbitrage fund doing fairly well from a retail perspective. I think, but having said that, is it going to be a part of customers' allocation? It's a long way to do in terms of the fixed income.
Okay. Well, that sums up the year that was. When we come back after the break, we want to talk about the big trends to watch out for as investors. Where should we keep our eye when we're looking at more products from the mutual fund industry? We'll discuss that. And also we'll have Anugrah Jain joining in, who is the CEO and a co-founder of the Bachatt app. Now, he will tell us how the MF revolution is actually now beginning to spread all the way to the bottom of the pyramid. Back with that in just a bit.
"26 years of CNBC TV18. Let's talk money.
Welcome back. You're with us on Let's Talk Money. And this week, we're talking about the big trends that may just define mutual fund investing in 2026. You've just been hearing thoughts from Mr. B. Gopkumar, MD and CEO of Axis AMC. And now joining us in the conversation is Anugrah Jain, who is the CEO and co-founder of the Bachatt app. Now, the reason we wanted Anugrah to join this conversation is that, Anugrah, I understand that through your app, a lot of people are going in for micro SIPs or absolutely small size investments. And when Gop sir mentioned this, I was wondering, I mean, does it make financial sense, business sense for you as a business owner, for AMCs? And if it does, then, you know, what are we really talking about? I mean, who are these investors? What are they buying? And what are they thinking when they're investing?
Thanks, Surabhi, for hosting me, first of all. As Gop was mentioning, see, the industry, there are only 5.5 crore mutual fund investors, but the demat accounts are roughly 20 crore. The gaming platform has roughly 20 crore audience, right? So yes.
It's a long race then.
Yes. So we strongly feel that everyone wants to grow their money and mutual fund is a great asset class for that. It's just that the products are required to be made conducive / tailored to their requirements.
Okay.
The fact that micro SIPs make the trial very easy for these customers. They can start very small. And when we talk about micro, this is like $150, $200 in a way.
And who are these investors? What is their level of awareness? What are they seeking? Why are they looking at mutual funds now?
Yeah, so like our primary customer base right now are the non-salaried class, not people like you and me, but these are shopkeepers, store owners, the upmarket businessmen and so on. They are looking for solutions where they can invest on a more regular, more frequent basis, which is somewhat daily in nature, because their incoming cash flows are in daily in nature. Unlike us, where we earn our monthly salary, so our cash flows are monthly in nature. That's why monthly SIPs are a great instrument for us. But their cash flows are daily in nature. So they need instruments which are somewhat mirroring their cash flow frequency.
Okay.
And to take out $200 daily is not very difficult.
Okay, so the small size is big, big enabler for them.
Yeah. And it compounds over time. $200 daily translates to 5,000, 6,000 in a month, which is at parity with a normal monthly SIP size. Right?
Pretty interesting. Mr. Gopkumar, what do you think of this trend? It's a marginal fringe trend right now. Could it grow into something bigger?
Yeah, I'm a very interested party in this conversation in the sense that when you look at the bottom of the pyramid, I think one side is become much more regularized, which is we are borrowing, where MSMEs and typically your all MFIs have come and
everybody's lending to this underserved segment.
But when you look at from a saving perspective, you still have a large gap. If you look at what are people doing, so if you go and watch them, you see every day somebody coming and picking up the money, and this money goes to credit corporate societies or a chit fund, and you've seen that people losing money there.
Yeah.
I think idea when Anugrah came to us and said that we want to do this, I think idea is to start with first the liquid fund, the daily SIP, and get into the habit of getting confidence of investing in mutual funds. I think that's a start point for this. And if you look at 70% of India falls under this bottom of the pyramid. and substantial portion of financialization happening. Second, they're pretty confident, the shopkeepers are, to do a digital transaction because their 80 to 90% transactions today are digital.
Are anyway probably happening through
Digital.
UPI.
UPI. In that sense, they're getting confidence.
Yeah.
And as long as the fintech like platform like Bachatt are able to give a reporting tool, which is almost looks like a passbook. And that's where the change is because he's getting much more confident. We are very clear that you start with a liquid fund because they are very, very sensitive towards
Losing capital.
Losing capital. So they're not worried about what interest they're getting because they are small savers. Even today, when you go and speak to them, you'll still see that people are investing in post offices, chit funds. Our idea is that can we get that set of customers?
And this is what, rural India, north, south, east, west, where is this wave most prominent?
Like sir pointed out, it's B30 cities. Like our 70 to 80% comes from town number 30 to town number 100.
Give me town names. Were
It
you
is
really
like,
seeing this
yeah,
take off?
it's like places like Bhopal, places like Alwar, places like, so that is not right now the remotest of the towns.
Yeah.
These are 38 to 100 city like say Alwar, say Gorakhpur, right? Right now our largely marketing is Hindi, so it is a little more centric towards the North India belt.
Yeah.
And these towns pop up very frequently.
Oh, interesting.
Right.
Interesting. So from a regulatory perspective, is there anything missing? Is there anything else needed to kind of fuel and propel this trend?
I think regulators started this concept with Choti SIP actually.
The Chota SIP, yeah.
Yeah, I think
The
we are
previous SEBI chairman was very passionate about it. Yeah.
The 250 rupees now will become 10 rupees SIP. I think
Yeah.
that way the industry has moved. Regulatory is very, very comfortable in terms of what we're trying to do. I think I do see that new set of investors coming here. And if you really look at the number, we have 5 crore 70 lakh customers. Where are the new set of customers coming in? If you look at 45 to 50% of the customers comes from fintechs. These platforms bring new set of customers. I'm not saying that MFDs don't bring in, but if you have to build scale in this industry, it's all about how do you get a new set of investors.
Okay.
That is very critical. I think platforms like Bachatt, there are a couple of more platforms, will bring scale.
And you don't need, as many, I'm guessing, feet on the street. So from a expansion perspective, it would be more efficient.
So because KYC is digital.
Yeah.
Your reporting tool is digital. Your transaction is digital.
Yeah.
So in that sense, end-to-end, a customer can do transaction without any interface or a physical presence here.
True. Yeah, absolutely. With payments, we've seen that revolution spread through how we are paying. So perhaps it's just a matter of time, it spreads into how we're investing.
Yeah, thanks to the government, thanks to the fintechs prior to us, they have taught all of these customers how to transact digitally. Everyone has a KYC which is digital in nature. They all appreciate digital transactions. So that learning curve we don't have to pass with them.
Absolutely. Now, speaking of what lies ahead, I want to talk regulation for a brief period as well, because it's been quite a landmark year. Regulators trying to do so much. There are, there is, I think, still that discussion paper ongoing about portfolio overlaps, how to avoid. The regulators toying with the idea of, paying your fund manager as per his or her performance. If they perform really well, they should be able to charge more. That's something that's still, I think, at a discussion stage. Then we have this new investment class, the SIFs, that have come through. So from all this, and then the whole debate around brokerage fee that, mutual funds should not be paying very high brokerage, so that I am not charged too much, which is still a hot subject of debate. So from all this, what do you think will be most important or most pivotal, one way or the other, for the industry in 26?
I think, let me summarize that discussion paper. It's a very hot discussed paper across. I think it is bringing a lot of transparency. It's just not on the TERs, how the GST has to be. So a lot of areas which had opaqueness, I think there is a lot of clarity, including the scheme names, clarity on that. I think that is changing. I think that is very good from an investor perspective. I'm very clear. Look at from investor perspective, these regulations are very conducive. The new asset class, which is the new product, I can call it, which is SIF, that will change a couple of categories, in my view. Because these are the products today available in alternate funds, which a large HNI would have invested. Just like example of a long short fund. But if you have a crore rupee only, you could have invested. Today, that is come in a mutual fund route.
And the threshold is only 10 lakhs.
10 lakhs.
Which is why I sometimes worry, could there be a crash and burn kind of a scenario? Because a lot of middle class India has 10 lakhs to spare and put it in a scheme, hoping for better than equity returns.
So if you look at the regulation, the regulation is not so, framework are very tight in that sense that how you can operate this SIF. So in that sense, blow up, in my view, is to some extent is not there at the moment of time.
Okay, okay.
Because what is the exposure you can take in terms of your F&O, everything has been clearly defined. So this discussion paper also carried a couple of points which has to be cleared. I think my view is that it will become much more clearer. 12 to 18 months, I will see this as a large category. There are category like BAF or an arbitrage fund will be threatened. I think the relook at if this happens. My view is that now retail investors can get one more set of product in their asset allocation.
Okay, now gentlemen, get ready. It's the last 1 minute left on the show. Okay. And I'm going to ask both of you to wear the hat of an investment advisor. Neither of you are investment advisors.
Yeah.
But let's say if you were to advise me, friendly advice. So to be, this is what you should definitely look out for in 26, or this category of funds, or these particular products. Okay. Watch for this. So, sir, what would you advise me? We're talking about a medium risk investor, steady investor, not looking at overnight returns, but steady compounding over 2-3 years.
I'll bet.
Where should I look? What should I bet on?
Just put like on a diversified mutual fund.
Diversified mutual fund.
Yes.
And you mentioned passives. Where do they fit in?
My view is satellite. It's a satellite allocation.
Okay.
In India, still active will do much better than passives in my view.
Okay. And any particular class of funds? I'm trying to
Just
pin you down.
look at flexi. Look at flexi caps.
The flexi cap category.
Leave the allocation to the fund manager to decide.
I think it makes a lot of sense to me. Less hassle. Let a good fund manager take that call.
That's how we should do.
Anugrah, your turn to advise.
I'm very fond of gold.
Okay.
So I would advise do a gold ETF, go a gold fund of fund. In the long run, I feel that gold is only going to, there's always a bullish run in gold.
But this is for long-term investing, obviously, not looking at chasing immediate momentum.
Yeah.
Okay, that's helpful. And this was an advisory tip with the usual caveats. One overall money or financial management tip. What would you say, sir, when people are looking and thinking about their money and how to grow their family wealth?
I think clearly do a goal-based planning as well as asset allocation. I think it will work fantastically. Okay. You will go through the cycles, whether it is fixed deposits, fixed income products, equity, everything will go through a cycle. I think as long as you have a good goal planning and asset allocation right, I think you'll make your money.
Okay, I think those are golden words. Absolutely great advice to probably end on. Thank you so much for joining in, and may 2026 be great for your teams, your set of stakeholders, and for all the investors out there as well. Thank you so much for joining in today.
Thank you, Surabhi. Keep up the good work.
Thank you. Thank you so much.
Thanks, it's our pleasure.
Well, with that, we're completely out of time on this conversation. Hope you found it fruitful. Keep sending us your feedback, comments, and queries. We'll see you again with another theme, same place next week.
Let's talk money. "26 years of CNBC TV18.